Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A reactionary bullish harami on Friday after the market had previously dipped down and closed below the combination of the neckline, currently 116.93, of the August to September 2020 head and shoulders top, then also the lesser 38.2% Fibonacci of the March 2020 to January 2021 move at 116.94, and finally the famous low of late March this year at 117.02. Indeed, it was the swiftly declining upper trend line currently at 116.43 of the recent descending wedge pattern which I've spoken about that acted as a base, allowing the move back up over all the previously breached supports. We ended up the day sitting right on the supports again. Meanwhile, topside, we still have the previous support, that's now resistance, of the 50% Fibonacci on the June 2020 to January 2021 move at 117.58. So far today, a strong looking follow-on, or pullback if you will, higher, with the market seemingly sitting and ready to extend yesterday's range topside, but with still the 50% Fibonacci line overhead. Cable, aka sterling against the US dollar. Second bearish black crow on Friday, though a far smaller one. It was nevertheless a second close below the interesting 61.8% Fibonacci line of the whole of the 2016 move at 136.54, as well as the middle time of the early June to late July bearish shift pitchfork, currently at 136.55, so not that far away really. It may be time soon to re-examine the idea of the whole 2021 action being a double top Adam and Eve type. And with the action since mid-July also, we may also have a possible inverted cup with handle pattern. More on that. Meanwhile above, actually some way above now, is the gently rising long moving average, currently 137.98, whilst below we have the July low at 135.70, and more importantly the 2019 high at 135.16 and the September 2020 high at 134.83. Now so far today, a small pullback up to and over the 61.8% Fibonacci line and middle time combination, but not really managing as yet to recover any further distance beyond that. Euro sterling. A second bullish white soldier on Friday, as well as a bullish open and close white Mariposa, and a suitable follow-on to the previous session's key reversal up. The market was almost perfectly bracketed in between the support of the flatlining short medium moving average, currently 85.52, and the resistance of the also flatlining medium moving average, currently at 85.92. As we've now exited out of the recent bear channel, there is an argument to look at the action since late May as a possible, if uncommon, right-angled broadening formation. If this is the case, then the April 2020 low at 86.69 would be the flat overhead baseline, and the old lower bear channel, currently at 84.33, would be the descending trend line. It is early as yet, but it would be an elegant solution to the recent action. So far today, well, not really that much. We're still capped by the medium moving average, and after a slightly lower start and a test up to it, we're coming back off again at the moment, though we're not really that close, not even midway down to the short medium moving average below at the moment. US dollar against the Indian rupee. A higher but still bearish black crow on Friday that seemingly couldn't make up its mind if it wanted to be an indecisive spinning top or a bearish dark cloud cover pattern, and really ended up being neither. Thus, it was at best a limited follow-on to the previous session's bullish engulfing pattern. Below, we still have the significant 50% Fibonacci line of the February to April 2020 move at 74.26, whilst above we have the lesser Fibonacci line at 74.46, then again at 74.59, and then the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63. I've still left on the daily chart the initial downside target X for the ascending broadening wedge pattern in the 74.05 area, the recent one we've just had, even though it was previously achieved, as well as the further secondary target X1 in the 73.80 area. That's untouched as yet, though I have doubts about whether we'll reach it as part of this cycle. Now so far today, gapping lower move below the 50% Fibonacci line at 74.26 and testing the rising short medium moving average, punching through that at 74.24. Now below we have the lesser Fibonacci level at 74.07. Then obviously target X again, and then the gently rising medium moving average, currently 74.03. US dollar against the Brazilian real. A key reversal down on Friday, and a sweet one as well, as the market dinked up to fulfill target X on top, the target for the recent bullish halfway hesitation in the 546.25 area, before dropping back down below some key supports and closing below both the 50% Fibonacci on the May to June 2020 move at 539.28 and the 2021 50% Fibonacci line at 538.46. There's something quite satisfying in seeing a target achieved and then the market make an immediate about face. Below we now have the flatlining we have the flatlining long moving average actually, and that's currently at 532.22. US dollar against the Mexican peso. A fifth bullish white soldier on Friday, and the longest one we've had, well, this past week. It also means, as the market closed up over the March to date downtrend, currently at 20.1948, that it lays open the question as to whether the action since March is a falling wedge pattern. This is a big pattern, if it is true, but it's now time to start asking those questions. If not, then the market will again choose the comfort of and the attractor of this market. Now, well, since April, the influential gently declining neckline of the February to March head and shoulders top, currently 1977.44. It also still acts as support at a pinch. The only issue with all that is that we have not only a whole load of congestion from April, in which we've had to work through if we do go down there, but also we've had to break every moving average below as well. Now, given what happened in the spike up back in June, it might just be worthwhile thinking about it, and to definitely hold off a few sessions just in case it is a false break upwards. Also, just in case, the next overhead resistance is the 2021 50% Fibonacci line at 2058.49. Now, so far today, a higher open, but then a move back down. So far looking like a bearish opening Black Mariposa, if a small one. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.